Hey traders, every year I review my trading performance and try to figure out how I can improve for the next year. I'm going to show you how it's done and give you 4 solid tips that you can use in your own trading right now. Let's jump into some great education and how you can improve your 2021 trading. I'm going to share 4 actions with you that you can implement today. You can start putting these pieces together today to improve your trading. But just a warning up front, this webinar, I'm not going to say, hey, buy the dip or use RSI or some other indicator or trade trend lines. I'm not giving you specific how to trade advice. This is more big picture stuff. And if you've never thought of the big picture, you probably should, because the big picture stuff is really necessary for you to get to the, oh, should I use an RSI? Should I use stochastics? What should I do? You need the big picture first. That is the foundation. Then you can get to the strategy, okay? You have to have that first kind of overview of what's going on. I call them high-level, big picture tasks, and that's kind of what I'm going to show you today. So let's talk about it. Let's talk about number 1, action number 1. Honestly assessing your current trading. Okay. What's that mean? Well, you got to look at where you've been. So let's just say this is your net P&L curve for the last year. Okay. And if you don't have this, you should go get it. You should know where you've been the last year, your ups and downs. Don't just bury your head in the sand if last year wasn't a great year. Or the flip side, don't have your head in the clouds thinking, well, hey, last year was good. I don't need to do anything different. You can always improve, but you got to start out with knowing where you've been. So for example, maybe you decide, hey, I made money last year. My return on my account was pretty good, but that's all good stuff. But don't forget, also look at what's bad. You know, maybe your equity curve was too jumpy. That's always one of my goals, is to make my equity curve smoother, you know, where it bounces around. That just gets to you after a while, right? And if you're inconsistent in either your trading results or how you apply rules or how you add strategies or any of that, you know, you want to know that. And of course, all of us probably spend too much time in a drawdown, but do you know how much time? Well, that's something to look at. And then you also want to look at your mistakes and errors. So I do a lot of times what I call is I measure a measurement that's called average per trade from perfection. Okay, where I account for slippage, I account for commission, and I just record trades. And if, let's just say in a particular strategy, I expected $15 of slippage, I'll record where I'm at. And that includes errors, disconnections, maybe you make some unauthorized trades, maybe there's a glitch in your software, whatever. You want to compare it to where you should be. So if I was trading just the way the strategy was trading, I'd just be right along this blue line. And if you're not, you want to know that, right? Maybe you're not accounting for slippage enough. A lot of people don't. And the point here is it helps you determine where you have been with your trading, and then that can lead to improvements. Another thing I do is I try to identify any errors I make. So if there's connection issues, if I missed orders, if I'm trading a system manually, if I didn't roll over the right time. And, you record them and also record what it costs you, because mistakes don't always have to cost you money. Sometimes you can make money with them. And I think the way it turns out a lot of times is you get some mistakes that you make money, some mistakes you lose money. Overall, you probably lose a little bit overall. At least that's kind of been my feeling. But I try to record things that go wrong. And the key here is, hey, something goes wrong one time. Okay, I usually let it go if I've never seen that type of error before. But once it starts happening a second time, then my thinking is, well, it's probably going to happen a third and a fourth and a fifth time if I don't do something about it. So that's kind of when I take action, when there's a repeat error. And it could be a rejected order for some reason. Okay, well, why was the order rejected? And you got to look at the details of it. So it takes some troubleshooting, but you want to try to eliminate as many mistakes as you can. The tough part about it is these mistakes a lot of times don't necessarily exactly repeat. It's like a brother or sister mistake that's sort of like it, sort of different. So you got to try to categorize these, but it's something, my past, I was in quality assurance. We used to do, it was called root cause and corrective action. You find the root cause of a problem, and then you take action to make sure it doesn't happen again. And when you do it right, a lot of times it's a pain, but if you really correct it, you don't have that problem again. So this is always good to do. The key point with this is to be honest, okay? You're only fooling yourself if you're not honest about your performance, honest about where you did good, honest about where you did bad. But a lot of people can't do this. They just can't be honest with themselves, and they think they're a much better trader than they are. And that's dangerous. So don't try to just explain away any bad performance. Hey, we all have down times, right? Just own it. That's the key. You own it. So that's the first action. Review your past year. Look what went good, especially look what went bad, and own it. And then that will help you get on the road to making sure that your trading improves in this coming year. Action number 2, quit searching for bailouts. What do I mean by that? What's a bailout? Well, think of the financial crisis in 2008, for those of you who were around for it. All these banks, all these investment banks, all these companies, General Motors and Chrysler and everybody was all going to the government, help us, bail us out, we're going to go out of business. Don't do that with your trading. And the way it shows up in your trading is you start looking on the internet and you see everybody's winning. Here's one on the left. She started trading in April of last year with 15,000. Now she's a millionaire. Okay, well, is she? Well, that's what she says. And this other guy's looking like he's in an aircraft, and oh, he's making so much money. Everybody wins on the internet. You very rarely see people who lose. And then this character, he said, hey, if you're not in the market, you're automatically losing, right? Because you could be making money. And you have all these people out there who just claim to win, 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 win. And that's what I mean by a bailout, because when you start having subpar performance, you start looking for these people, or worse yet, they somehow start finding you. You start Googling winning trading systems, and all of a sudden these characters pop up. And hey, for just $49 a month, they can teach you how to trade and make tons of money. just remember, most of the stuff you hear on the internet isn't true. If Twitter was reality, the world would be a different place, because I've never seen people lose on Twitter, but I always see people winning. And StockTwits is the same way, and even a lot of trading forums, people just win, 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 win. And TikTok's the new one for millennials. Uh, for those of you who might be around my age, 40s, 50s, maybe you don't do too much with TikTok, but there are so many TikTok millennials who just claim to make tons of money trading stocks. Okay, well, maybe they're making money, maybe they're not, but sure not the impression you get. And if you don't believe me with this, hopefully you've seen what happened with Jason Bond and Raging Bull. If you've been trading for a while, you've probably seen tons of their Facebook and YouTube and Twitter ads. And they were just busted by the government and shut down because of all their ridiculous claims. So you just got to realize there is nobody there to bail you out. You can bail yourself out, but there is no easy way, because trading's hard, and I'm not talking about like stock investing where you just pick a stock and walk away for a few years and maybe look at it once in a while. Actual trading where you're in trades for a week or two, it's hard. It's hard to develop trading systems. And the easier somebody makes it sound, the more likely they are, if they want money from you, that you're not going to get anything of value. So just remember that. Run when you see this kind of thing. Now, obviously this is me, but this was a student of mine who said, you don't hype yourself enough. So I created this for you. So I don't own the gold chain. I don't own the dollar sign. I don't own whatever kind of car that is. Is that a Ferrari? I don't even know. And I don't own the yacht. That is a picture of my backyard. I do live on Lake Erie, but that's the only part of it, and the shirt's mine. But everything else is just a parody. So if you see things like this, you can pretty much run, because the more they have to talk about what you're going to get, I think the less likely you are to get it. So just keep that in mind. Don't fall for the hype. Okay, so that's action number 2. And hopefully everybody understands that. And that's just something you got to have a mindset, because I'll tell you what, I sometimes fall for it too. Of a bad trading day or a bad week, and you see some ads of people making money and you start to get depressed. So you got to really be vigilant about just keeping that those kind of people out of your view. Okay, action number 3. You got to have a plan. If you don't have a plan, as the saying goes, failure to plan is planning to fail. Okay. And the way I set up a plan, you have some different components. You have your big picture, how I'm going to build strategies, how I'm going to do money management. That's all important. You also have your operational plan. What am I going to do every day? Oh, every day I'm going to spend an hour developing new strategies, or I'm going to be at my computer, or I work during the day so I can only do this at night. It's part of your operational plan. You also have a disaster plan. If you don't, I'll tell you what, eventually you're going to get caught up in things. But things like, what happens if your internet goes down and you're trading? What happens if your phone goes down, or your brokerage, you can't get to them online? It was happening with E-Trade people last week, where they were complaining that they just couldn't get on the system. What do you do then? Do you have a backup plan? So you got to deal with things when they go bad, and that's a real key. And then you also have a yearly plan. What are you going to do in 2020? this should say 2021. Sorry about that. What should you do in 2021 to further your trading? You know, are you going to learn some new things? Are you going to try trading a different way? Are you going to open different accounts? Are you going to get more capital from a source? You know, I've heard of people who start a second job and everything they make in the second job goes towards trading capital. You got to have a plan for all that. And the reason why is the more you follow that plan, the less likely you're going to be derailed, right? It's easy to get off track when you don't have a plan, a written plan. Here's what I'm going to do the next year. And when you just wing it, anything's liable to happen. So you got to watch out for that. And it's pretty much proven. I've worked with enough traders to know that traders with goals and plans outperform those without. Should be no big surprise. And it's goals and plans pretty much is a key to success in anything that you do, not just trading, but you want to get a better job or a better career. Well, you come up with goals. I want a better job. I want this kind of job, making this salary. And then you put a plan in place to make it happen. The people who don't have goals and plans usually are the losers in all this. So that's action number 3. Pretty easy. Just have a plan, have goals, and you know, the details of it probably take some time, but the concept should be pretty easy. And then action number 4, the last one. You got to be ready to pivot. You got to be flexible. You got to be ready to update as necessary. That is key. Can't be rigid. I've been telling my kids that for the last year with just COVID in school, where some days, you know, they go for weeks without being in school. They're doing e-learning. Then they have to go to school. And it's very unsettling, especially to a little kid. But I said, you got to be flexible. This is an important lesson. And you watch things and you make changes as you find them necessary. This is all called continuous improvement, the whole idea, where you identify things you can improve, you plan it, you execute the improvements, and then you review. Did it work? Didn't it work? And it's really critical for long-term success. You ask any company out there who's been successful long-term, I can almost guarantee you that they have a good plan for continuous improvement, for getting from where they are and trying to do better. And you got to do the same thing with your trading. You can't rely on doing the same thing year after year. You just can't. It would be nice. You know, some people think, hey, I created an algo and I'll be able to retire off the algo. Yeah, I wish that was the case. But you know what? There's all these people right behind you who are creating their own algos. And sooner or later, they're going to take over for you if you don't keep ahead of them. And that's what continuous improvement's all about. So here's a good example. So, you know, I mentioned my kids. I'm teaching them about stock investing, and I use this book as kind of my baseline for teaching them how to invest in stocks. And this whole continuous improvement project, I said, well, identify things you like, plan it, you know, determine how it fits in this little portfolio. You know, they don't have a huge portfolio, but they could pick some different stocks. Then, hey, go over the picks with me, and I'll execute the trades. They can't, but then review it. And the review part probably is the most important. If they pick a stock that isn't good and it's losing money, well, maybe after a little while they decide to sell it. And again, all these things kind of come together in a plan. It's worked out pretty well for them though. They started about less than 2 years ago, and all of them in these stock accounts have over 100% return. Um, Pretty nice. Now you could say, oh, it's been a bull market, but uh, yeah, that's true. But I know a lot of people who've not doubled their money in the past 2 years. So, and I try to tell them, hey, this isn't liable to happen again and again and again. At some point, it's going to end. But they're getting the basics in, and now when things start to slow down, they have a good grasp of how to improve and how to take new trades and do that sort of thing, a good review process. So it's all about course corrections, right? I mean, if you're a ship and you want to get somewhere, you keep making little movements and to eventually point to your target, because things are going to knock you off track. And trading's a good example of that. You're going to think you have these great strategies and they're not going to work out that way all the time. Well, you got to be able to change your track, and you got to be flexible with that. So incorporating this continuous improvement, this whole idea is huge for the future. Okay, so what have I talked about here? First, give yourself an honest assessment. Be tough on yourself, but at the same time, be honest with yourself of where your trading's going. If it's going great, then just keep doing it. But if it's not, then you got to look at maybe making some changes. Avoid those get rich quick fixes that you see out there. They are constantly bombarding you, and they're dangerous. They are really dangerous. Have a plan, have goals. That's key. You can do that right now, and be prepared to change course to improve. If you see things going wrong, make corrections. So these are 4 things you can start doing today, and you might not see results on some of them immediately, but I'll tell you what, if you put all 4 of these in play, you're going to see results in the long run, improved results. Well, thanks for watching. If you like this video, please give it a thumbs up and subscribe to my channel. And of course, if you have comments, maybe some things that have worked out well for you, I'd love to hear it. Please leave a comment with specifics. I'll reply to all comments. I'm Champion Trader Kevin Davey. Have a great day.